This week, I'm going to answer a viewer question on Neo Performance Materials, symbol NEO on the TSX, trades at around 1669, 694 million dollar market cap, pays about a 2.5% dividend. They have three business segments intersecting the engineering, processing, and manufacturing at advanced RE, critical minerals, and magnets. They are global leaders in each area given their 30 plus years of operating history and have 9 manufacturing facilities in China, Germany, Estonia, the UK, Canada, Thailand, plus a dedicated R&D facility in Singapore. I'll give you a rare earth 101 to start here. Rare earths are a group of 17 metallic elements. They're most simply broken down by their atomic weights and then referred to as light or heavy rare earths, LRE, light rare earths, or HRE, or heavy rare earths. Rare earths are used in magnets, phosphors, metal alloys, and batteries, auto catalysts, fluid cracking catalysts, glass and ceramic additives, and glass polishing powders, among many other things. Now, let's look at Neo's share price this year. Tremendous performance. While slumping post Q3, as we'll talk about in a second, the performance has been great. Year to date, up 110%. But all time, if we go back to when it IPO'd right at the end of 2027 in December, the shares have not performed well, down approximately 5% in nearly 9 years. They've certainly been volatile over that period. Let's take a quick look at those Q3 numbers, which halted the upward momentum in the stock. Revenues were an increase of around 10% to 122.2 million. Adjusted EBITDA, however, was 19.2 million, about a 2% decrease from Q3 2024. EPS, a significant increase at 20 cents from adjusted EPS of around 3 cents in the same period last year. A note here, the reported Q3 2023 EPS actually beat consensus estimate of around 15 cents. So they beat the consensus, but the market did not like the drop in adjusted EBITDA. Cash flow for the 9-month, cash was actually used in operating activities for the 9 months was about 25.4 million. That was primarily driven by a $12.5 million settlement of a European patent claim. They had higher receivables and an increase in strategic inventory in the quarter. Let's look at the segmented performance here. Magnaquench, where we saw the strongest growth, increased sales by 20.4% to 54.9 million. The driver here was record bonded magnet volumes, which were up 21% year over year. Adjusted EBITDA increased in this segment by 26.7% to 8.1 million. Highlight here, this represented Magnaquench's strongest quarterly adjusted EBITDA performance in over 3 years. That was driven by robust volume growth. The chemical oxide showed a significant profit turnaround. Revenues increased by just 3.3%, but adjusted EBITDA soared 213% in the quarter. The driver here was a massive increase. That massive increase reflected solid performance attributed to higher rare earth prices. That's where you can see some significant fluctuation in this company's profitability and a successful transformation of the business and continued operational discipline. We'll talk about that transformation in our conclusion. And in the rare metals segment, normalized following record prices. They had record prices in the quarter last year. There was a slight increase here, about 2%, but adjusted EBITDA was down significantly, almost 30% in this area of the business. The driver here was a decline. It was expected, but it primarily reflected the normalization of hafnium prices, a rare metal, rare earth, following record highs achieved in the prior year period, Q3 of 2024. The overall consolidated result was a slight decrease in adjusted EBITDA. That was due to like we said, the significant decline in rare metals segment, offset by those gains in the Magnaquench and chemical and oxide segments of the business. So the Q3 results highlighted 2 major project milestones: the new European sintered magnet facility and the heavy rare earth separation line. Let's look first at the new NEO's Performance Materials European Sintered Magnet Facility. It's a significant project in Estonia aimed at establishing a resilient and independent European supply chain for high performance rare earth magnets. The project status right now, it's open and operational. The facility held its grand opening ceremony in September of 2025, the end of the reporting quarter. The production status, the facility is already producing and shipping qualification magnet samples to customers. So just starting with the first samples shipped in April of 2025. Target markets here, the magnets are crucial for electric or EVs, traction motors, aligning NEOs with the EU's Critical Raw Material Act and local for local supply chain initiatives. The initial capacity that is in phase 1A is it's projected to produce around 2,000 metric tons per year of sintered magnet block, enough for approximately 1 to 1.5 million EV traction motors annually. Expansion plans, this would be phase 1B. The plans are in place to scale to capacity of over 5,000 metric tons per year to meet demand from customers. The major contracts that are in place, the facility has secured contracts already, including a significant supply agreement with a leading European Tier 1 supplier of EV traction motors, representing about 35% of its phase 1 capacity. NEO has also extended its strategic partnership with Bosch for high performance magnets. Let's look at the funding and the location. It is strategically located near NEO's rare earth separation facility in their existing facility in Estonia, and supported by the an EU grant, a Just Transition Fund, and a $50 million US credit facility from Export Development Canada, or EDC. Let's look at that heavy rare earth separation line in Estonia, in another area of Estonia. The project is aimed at providing an independent Western source for the most crucial and difficult to source elements. The status here, it's nearing completion. NEO is in the process of installing the heavy rare earth separation pilot line. Targeted timeline, commissioning, and the start of the small scale separation is expected early into 2026. What is the significance of this? The line extension of the existing rare earth separation infrastructure in Estonia allows them to process the full suite of rare earths, including heavy earths, or HREs, like dysprosium and terbium, which are essential for performance magnets used in EVs and defense. So this marked the Q3, these milestones, the opening of the European magnetic facility, transitioning this product from construction risk to an operating asset, while the HRE separation line progression is progressing well towards full commissioning. So these are milestones that the company is hitting on. Let's look at the guidance here. You can see they raised this. Well, this was raised they reported that it was raised, but it was raised earlier this year, previously in August, up to a range of 67 million to 61 million, up from 64 to 68 million, driven by a strong third quarter performance. Let's look at the company's balance sheet. They have maintained a strategic cash position while incurring debt, primarily related to funding its European expansion projects, which we talked about above. NEO's net debt position is conservative, with a relatively high cash balance that's used to fund major CapEx projects. Year to date, those have been 8.4 million, and they covered that 12.5 million patent claim settlement earlier this year. Let's look at the valuation. So overall, the balance sheet is fairly solid, conservative, but the valuations right now, the PE on an adjusted basis is slightly over 100. EV to adjusted EBITDA is 8.4, a little more reasonable. The PE, there's expected to be a significant increase in EPS, or adjusted EPS, in 2026. So clocking in right now just under 30, and then the EV to adjusted EBITDA for 2026 is just under 8. So our conclusion here, the business intersects multiple areas of rare earth element and related magnet and chemical compound nationalization, and potentially has decades plus of growth ahead. Um, NEO has been slowly moving up the value chain in recent years and starting to reap the benefits. They are global leaders in permanent magnet manufacturing, which is a complex task, and automotive emissions catalysts that have years of growth ahead, and have improved operations historically from the volatile RE business lines to more consistent historical earnings, and have fluctuated significantly with price input and end input. That's historically over time. They've had very high levels of earnings fluctuation with the prices of their inputs and end products. The valuations here, like we saw on a PE basis on current earnings, they're high. If the company can deliver on the growth that analysts see for this business over the next, say, 1 to 2 years, we'd say more 2 to 3 years out. The valuations are more reasonable. This is certainly a company that we monitor closely, and we'll be speaking with management in the near future. There is our disclosures, and I am done.
Yeah, I mean, nice to see that they're actually fulfilling, some of the additional capacity that they're bringing on as well. Because, that's always the thing with a company that's bringing on capacity. Can they fulfill it? A company that can't all of a sudden fulfill the capacity can get into trouble by, all of a sudden they're bringing on a new facility, higher costs, and whatnot. But it's good to
Yeah,
see.
for sure. And they're at 30%. They got to keep fulfilling it,
Yeah.
obviously, right? They got to go through that, but they're starting at a level that at least gives you some. It gives you some optimism that they may be able to move forward and get up to the 50 plus, 75% plus that they probably need to really start to be profitable. Again, they still have to do it. So we'll continue to watch the company de-risk itself, and maybe there'll be an opportunity long term in this business. Certainly, if they can get rid of some of the volatility that has been in that business. You've had a company that has tremendous quarter, then loses money, tremendous quarter, then loses money. Smoothing that out over time in this segment would make them a viable investment option over the long term. That's what we're looking for. We'll continue to monitor.
Yeah. And I was just going to add, they've just been in the right place at the right time over the past 7-8 months, really, since the April, just the geopolitical shift. And you can see that right in the stock prices. Even though the Estonia plan was in place for 3-4 years, and they've been building out for the past 2.
Yeah.
The share price practically didn't move during that entire time. And the second the geopolitical risk and the supply chain disruption came into picture, stock price just surged. And that really just shows, even though they were executing, it just wasn't really what the market was thinking about with the supply chain shifts. And that was what they were wanting to do, was shift out of China. And just opportunity timing wise, it seems to have worked out quite well for them.
And I mean, I'm sure they know the situation on the ground there, but they had moved ahead of, tariff situations and all that, which is, it's good to see that they were proactively moving ahead. But then like you said, it aligned with all the geopolitical activity that's gone on, and where else can the world get supplies of, rare earths and processing and find good, solid companies to process. So yeah, it is an option right now. Again, it is expensive based on earnings. If they can execute on the growth, it is something that we would look at more closely.